with no fear. The stage is set, all engines go. Welcome to the angle. Let's start the show. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle. No time to delay. Markets rise and markets fall. Atomcash is ready to answer the call. While the bulls charge hard and the bears dig deep, the angle will keep you on your feet. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay. Cashing in on the highs and lows where the wind of fortune constantly blows. No looking back, keep your eyes on the prize. Fuel to run with a fire that never dies. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay.
Good morning, everyone, and welcome to the most entertaining, intellectually stimulating, educational, financial podcast in the entire world. This is the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Adam Cash, and I'm bringing you the firepower that your financial life may have been missing. Now, whether you're either new to trading or a trading savant, I aim to turn complexity into clarity with a shot of adrenaline. Now, today we have an exhilarating lineup of segments to give you all as much information as quickly as possible, as per usual. We're going to do our pre-market check-in, live trading, and some market analysis from now until 9:45. Then a favorite segment I am bringing back for you guys today, the heat check. We're looking at some really popular names on the stock market right now, some meme-ish kind of names. One of these names actually got a huge gain yesterday, so we'll be talking about that. If that's something you're interested in, stick around for that. That'll be around 9:45, 10 o'clock. I've got, I believe, 4 or 5 names. These names are obviously names you've heard of. A lot of hype on social media, so if that's something you have interest in, you may even have exposure to one of these positions, you may want to stick around for that. We're going to dive in to each one of these names, get a better idea of if there is anything substantial there, or if it's all a lot of hot air. So stick around for that segment later today. Now, as per usual, what I want to do with you guys before we get too deep into anything is look at our catalyst watch for the day. That way we're prepared for if any kind of, as I like to call them, landmines come across the day, meaning any sort of news events or anything like that that we need to be aware of before we head into the day for trading, especially if you're a day trader. Now, we did have Powell kind of speak earlier this morning. It really wasn't much of anything. It was just the federal bank conference thing, and he was just saying a few words prior. It was really a nothing burger. That was a potential catalyst, as I mentioned yesterday for our members over at Exclusive Trading. Could have been a catalyst, obviously, if he said something, but ultimately, he didn't really comment on economic policy or monetary outlook at all, so it was really just, it was nothing. Now, would he talk later or whatever? Probably not, so that is done and dead. That was an 8:30 potential catalyst. We have a bunch of earnings. We're getting into earnings season. You got Raytheon, General Motors right now, and Coca-Cola all going right now. Those are the big ones you want to keep an eye on, especially if you have exposure to that kind of sector, consumer staples, defense. Keep an eye on that. Even, I mean, technically, utilities with General Motors, or not General Motors. Sorry, I thought that read General Electric, so wrong. Don't worry about utilities with General Motors. You do have Trump speaking with the Philippine? Yeah, president today at 11 o'clock. Well, technically 11:15 or whatever, but it's around that time frame. Be mindful of that. Sometimes he just says things during these events when he's talking to these leaders, so he might say something about tariffs or whatever. So at least be mindful when that's happening if you're in a day trade, because especially between 11 and 2, volume tends to cool off and you can get a bit of an exaggerated move either which way, whether bullish or bearish. Maybe a time for you to consider being risk off. Something else to be mindful of today. Now, this is tentative on my watch list, or my catalyst watch for the day, but the OpenAI CEO is scheduled to speak during the Fed event today. That's tentative, though. That tentative time is around 11 o'clock, so at least stick that in the back of your head, especially if you have AI exposure. I know a lot of you probably are invested in AI, have some sort of AI exposure to your portfolio, so you're going to want to be mindful of that if anything is said during that time. That could obviously affect any of your holdings in the AI realm of things. You also have a Fed speaker, Bowman, speaking at 1. Outside of that, pretty clean day. Now, leaning into tomorrow, which we'll do a show tomorrow as well, if you don't know. Show tomorrow, 9:15, same time as right now. You have Trump speaking on AI tomorrow morning. So if you're in AI between today and tomorrow, that's going to be a hot sector for catalysts. So that's something to really keep an eye on if you have any exposure in AI. On top of that, you also have Google earnings tomorrow. So everything involved in AI could be very... word I want to use, volatile. Could be very volatile, not necessarily bullish or bearish, but more risky in general. So stick that in the back of your head. If you are an AI investor, have AI exposure, between today and tomorrow, we could see a little bit of, I don't want to say hesitation, but a little bit of volatility, like I said earlier, in that sector specifically. Now, looking at the market, I did want to bring up one thing because I did bring this up on the channel. And we did talk about it last week, and there's a recorded video on this, but Grab making a nice little move here in the pre-market. Well, last night was better. We got all the way up to 580. Now sitting at 550. We did technically break that downtrend that we talked about on the program. And this area, as I mentioned on the program, is a very hard area for it to break. Between basically 5.52 and 5.91. That's a very hard area to break, but if it breaks, it will go pretty hard, in my opinion. This we had a PR last night saying about how they're operating in Singapore, I believe, and they have an ER coming up on the 30th. So this is a very interesting setup right now. Flow on this has also been good. If you're someone who's an option trader, you look at Flow or Flow Trader. Flow on this is pretty good. Technicals are good. You have a good breakout here. You're going to want to watch this name. If you're not in this name, I'm not saying rush in or anything. Do whatever you want, but you're going to want to keep this name on your watch list. If this 5.91 area breaks, this is going to move very, very, very hard. The weekly setup nice, the monthly setup nice. If that breaks, this is going to move hard, and I like it a lot. Let's get into the market, though. We got about 7 minutes until market open. Guys, I'm going to ask you twice a stream. I only ask twice a stream. I know it gets annoying when you watch live content, but please do me a favor. I'm a very small fish in a very big pond, and wherever you're watching, anywhere in the galaxy, whether it's on YouTube, Instagram, or X, do me a quick favor. Like the stream. Drop a quick comment. Subscribe or follow me if you haven't. I appreciate it greatly. And don't forget, once we get over to 500 subscribers on YouTube, this show will be an everyday show. So if you like the content here and you like what I'm putting out, please go over to YouTube and subscribe. Same name there, Atomcash. We're almost to 100. So pretty good movement there on the YouTube front. So if you want some great content there and continue to move some great content for you guys, please support the program. Now that the plug's out of the way, let's get into the market. Right now, it's currently sitting at 629 here in the pre-market. Yesterday, we made a new all-time high, which I should really mark out, at 631.54. And every time the market makes one of these new all-time highs as we're moving up, you're going to want to put what I like to call, or what we call in exclusive trading, an LOI, a level of interest, at that area, because it's an area that is very important and has rejected there. So at least on the daily, right? So you're going to want to watch that level today, especially as we're opening around the 629 area. Let's zoom in a little bit, maybe look at the 5-minute here. Between these two, old all-time highs here, 627.86 and 629.47. So at the open, if we could push and break this, it's very likely that we'll push hard into that the new all-time high as of yesterday, up at 631.54. So you're going to want to watch the 629.47 level as a catalyst to push for a rally to the upside. Now, with that being said, if this doesn't break, there's a good chance we're going to get pinned here. As you can see, after hours yesterday, pre-market today, that 627.86 was 1 penny off as acting as a support on the SPY. So this will act basically as a chop zone today. It wouldn't shock me. So you need to see the bulls push hard here. And if the bears, for whatever reason, break the low, I would consider a long because there's a good probability that we would reverse back to the upside unless there's some sort of news catalyst or anything like that to go against that thesis. T-Burn says, let's go, T-Burn. And Negum says, good morning to you and everyone else who is watching. IWM is what I'm looking at. As you guys know, I keep saying it over and over and over. 223.32. Get a tattoo at this point because that level is so important for the IWM, the Russell, your small caps, all of that, and sentiment as a whole. This level is crucial. And if you don't believe me, I don't know what to tell you. Put it on your chart and look at yourself on the daily. Crucial level. I think I've said it at nauseum now, essentially, during the program, and I should really just mark it out in bold red line and make it really, really obvious. But yesterday, interesting rejection item. As we broke that level, we came back down and kind of sat around the 9 EMA on the daily. It's looking a little bit like an inverse head and shouldery kind of look here, but it is questionable that the daily, if the daily does turn around in the next 2 to 3 days here, you could treat this as kind of like a bull cool down here on the daily. The weekly needs to cool down a little bit, and you can see the the MACD getting a little toppy here. You have 3 topping wicks here, at least so far, on the weekly forming, including this week, so that's a little concerning to me. But the monthly still looks really solid here for a push even higher, especially with that MACD reversing in decent volume. In fact, our VMA is actually increasing, so our volume moving average on the month is actually increasing as we move up. So longer term outlook on the IWM is still pretty positive. It's just this is a very, very, very pesky level and a very important level that you guys, again, can go back on your charts and look. That 223.32 above is bullish, below is bearish. It's that simple, really cut and dry. So you're going to want to watch that level today. Key level to the downside if the bulls don't recover. You're going to want to watch this 0.65 retracement, which pushes you back in the GP here, the golden pocket, back in this little choppy zone here between 217 to 1934. I'm of the belief that we'll get a rally today and get back over the 223.32, but I guess we will judge that at the open. And as for the Qs, pretty similar to SPY, obviously, and it's moving closer to SPY than IWM. That's why I really want to focus on IWM on this program, because of how tightly wound together SPY and the NASDAQ is. Obviously, a lot of your big tech names help influence the market greatly. But that's why I look at IWM to give more fuel to the fire. If the SPY and the Qs are the fire that's roaring, I'm looking at IWM as a stack of firewood and covered in gasoline that if we throw it into the fire is going to turn to a bonfire and turn rip-roaring. So that's why I'm so interested and so focused on the IWM versus even bothering about the Qs, because the Qs are mirroring the SPY pretty closely, and you can look at your charts if you don't believe me. And that's why I see a lot of the opportunity in the IWM and in Russell and in small caps in general as at least the catalyst driver, or the sentiment driver, I should say, for the next leg up into the market. It's part of my whole thesis on SPY to 700, which I made a video about a while ago and a live stream about. That's why I believe that SPY will hit 700 at least before the year's end, which at this point isn't much of a far cry. We're looking at about 12%, which is still a decent move on the market in a period of about, 5 months, 6 months? So realistic in my opinion. It's closer to 4 months now. We're at the end of July. So definitely could happen. Looking at 2% month over month, realistically could get there. All right, we got about 1 minute until the market opens. So we're going to watch SPY. We'll flip through our sectors, get an idea of what the market looks like at that point of view. Right now, volatility is a little bit down here in the pre-market. NVIDIA is a little red. And basically every other Mag 6, as I like to call them, are green. So and NVIDIA is marginally red, so not even by a big chunk. So we'll watch the open here and get an idea of what is what fresh hell the market has for us today and kind of go from there. And like I said, guys, make sure you stick around until around 9:45, 10 o'clock. We're going to do the heat check, look at some really popular meme names in the market and see if there's any substance to them or if there's even a trade there. So you're going to want to watch that and stick around for that segment as well. Okay, the market is open right now. Pretty flat open, all things considered. So we'll keep an eye on the SPY. And like I said, the IWM today I'm more interested in general. Interesting divergence right out the gate with the Qs selling off and IWM getting a little bit of a rally here. Consequently, SPY coming down as well a little bit. So don't love days that we have divergences, but it's not shocking when you get a divergence. on the Qs and on IWM. As you see money flow and money move around, that's not terribly shocking. Let's see. UVXY getting a little pop here. NVIDIA basically reject its pre-market high, which is right before the open, selling off a little bit here. If you're a day trader, you could get an aggressive long right now for a scalp on NVIDIA. This is where I take a long scalp, and I would take it. Yeah, I would have taken, literally that would have been like a 5-second trade. Bounce out, done. Which if you're watching this program, it's on a delay. Not an ideal. That's why we don't do scalps when I'm live. It does not work out well for you guys. Microsoft pretty flat. Google selling off a little bit, but up near that 190 area. Apple selling off at the open here. So tech is starting to sell off a little bit here at the open, or at least our bigger names here. Tesla around 330. Yeah, SPY getting a little bit of a dump here in the open. Meanwhile, look at IWM. Nice push here in IWM, 222. Let's keep an eye on small caps. Like I said, that is where I believe the opportunity really lies. And we've actually seen this, and you guys can go back and look. The last, like, maybe a week or so, it's like when the Qs are red, the Russell's green, and it kind of like flip-flops back and forth. And this divergence is very apparent. It was apparent, I believe, like 8 months ago, where it was almost every single day. If the Qs were up, the Russell was down, and it just back and forth, which is really indicative of rotation, which I want to check our sectors here in a moment, but I want to see if IWM just pushes up to that key 223.32 level right at open here, because it's looking like we got a nice move here. Volume's pretty good at the open here on IWM. So I want to see if there's a big push here right at the open on the Russell. SPY coming straight down right now for the most part. Got this LOI down here, like I said, that's 627.86. That's where you could consider a long, because you also have this another LOI just shy underneath it. Where it could get caught in reverse in there. There's a good chance that we would close over the 626.86 today. So I wouldn't necessarily want to be short unless, again, we have a news catalyst that would justify a short. But otherwise, we're going to get pinned here. I think the most likely scenario is we get pinned here today unless we break this upper LOI before like 10 o'clock. So I wouldn't be too aggressive on day trading, at least the SPY today, unless you're scalping, right? But more of like a longer term day trade, unless you get a bottom end, you top tick, or I guess bottom tick the lows for a long, or top tick the highs for a short. But like I said, it's got till probably around 10 o'clock to try to break this level. So we'll see. We'll come back to it. Oof. Yeah, Qs got real heavy there at the open. Clear divergence here between the Qs and the Russell right now at the open. Here's our Soundhound. Sad day for Soundhound yesterday, and it's not looking too great. I don't love this daily candle yesterday. It's looking like a double top, looking pretty ugly. Bulls really need to step in here sooner or later. This is going to fart around down here for a bit longer before anything comes to fruition here on Soundhound. VIX is up a little bit here. VVIX pretty flat. UVXY up a tad. Yeah, NVIDIA dropping about $2, $3 at the open here. Nothing but red candles since the open. Like I said, unless you took that quick scalp and it was like a 5-second play there, this is just dropping right now. Microsoft trying to hold the ship steady. Google not doing too much better, but Apple is still looking kind of good. Apple is slowly gearing up for a bigger move. I just still don't love it. I've been debating actually getting long on Apple and utilizing like a stop around the 205, 208 area. You got earnings coming up, which obviously is going to be a catalyst either which way. So there's a little bit of extra risk there. But if they blow earnings out of the water, which they typically do pretty good on earnings, they know how to make it look pretty. Looking like you could get a sizable move here on Apple in the near term. The way this is shaping up from a technical basis, looks like the bulls want to push it and they just don't have the oomph. And they kind of need some sort of catalyst driver here, and that earnings could be that catalyst driver for Apple. So I am interested in Apple. I'm not bullish on the company. I'm more bullish on the chart because I think Apple is, outside of them sitting on a war chest of cash, I think they're one of the most boring companies because they're not innovating anymore. And that's a huge long-term threat to Apple, in my opinion, that they really, really, really need to innovate more with their products like they used to. Amazon finally got to that price target I've been eyeing really yesterday, but now today's sitting around there, around the 228 to 229 area. Nice push there. Basically in conversation now for all-time highs on Amazon. I wouldn't chase especially with earnings coming up. Same day as Apple on the 31st. And then, again, I will continue to say I'm not bullish on Tesla until basically 360. You could even draw a trend line here, I'm sure. Just eyeballing it here. You have a downtrend forming. You do have higher lows here. And you are above all your EMAs and MAs. So there is a world where this works out. You do have earnings tomorrow. So this could be very explosive. The way this is shaping out, lower high, lower high, lower high, higher low, higher low. It's getting very tight here. You're above all your EMAs and MAs. If they blow it out of the water, they could have a really solid pop here. But again, you're betting on a binary event. You're betting on earnings, or anything can happen on earnings. So you want to be mindful of that if that is something you do consider for your portfolio. All right, IWM pushing here, still pretty clean out the gate. 222.40 right now, looking pretty solid. All things considered. Okay. Sorry, I'm just checking some of my positions real quick. Having a pretty good day so far on the market. Love to see it. Not too shabby. Okay, back to everything else here. Let's check out our sectors real quick. Get an idea what's going on. Let me just double check that nothing popped up here. Because sometimes we get someone who decides they're going to start yammering around 9:45, and I'm always nervous around 9:45 and 10 o'clock. There's always something that gets thrown around at 9:45 and 10, or not always, but tends to have something. Not much really. So I guess we might have a clean morning, which would be nice to see. Let's look at our sectors real quick. Utilities, marginally green. Energy, pretty strong rally on energy here. Up 0.5%. Consumer staples down. All right, so this is interesting. Your tech is selling off. Arguably, your defensive sectors are more bullish than they are bearish today. So this could be a little bit of a flight to safety here. That in combination with how IWM is looking, you could see people rotating out of tech today. I would say going more defensive, but moving to the Russell would be more risk-on behavior. So it is a little obtuse to see. That tech would be selling off, and you would see a rise in your defensive sectors and also a rise at the Russell at the same time with a mostly flat VIX, UVXY, and for some reason my VIX doesn't update until like 9:45, but mostly flat volatility, bullish Russell, and bullish defensive sectors for the most part. Consumer staples a little flat. Very, very, very interesting movement here, especially with tech being red for now. So that is something to be concerned of from a risk perspective. That's more risk, for me, defensive, because it's not saying the market's being risk on or risk off. It's looking confused at the moment. So for me, I don't really want to touch anything when it's like this, just because I always like to trade with the prevailing wind, as I like to say. So when the wind's at my back, I want the wind to always be at my back. It's easier to run when the wind's pushing you, right? And when your wind's at your back, when you're making a trade, that means the trade is more likely to move in your direction. So I don't want to have the prevailing wind blow back in my face. I'd rather wait to see which way the wind is blowing. And right now the wind isn't really blowing any which way yet. It's a little indecisive. Real estate's up a little bit. Actually, real estate's leading pretty good today. Up 0.6. Materials up 0.3. Industrials mostly flat. Nothing too big there. Big bump on healthcare. 1.3% on healthcare. So you're seeing a big move in healthcare today. Financials are pretty good at 0.5. Consumer discretionary, so this is again your Amazon and your Tesla, pretty solid at 0.5. Comm services pretty solid at 0.39. So overall, things are looking mostly bullish. If tech does turn bullish, so your XLK, this may be one of those days where everything is green, which isn't a bad thing. That's not necessarily bearish by any means by having your defensive sectors green while your other sectors are green. It's more concerning when your defensive sectors are green and everything else is red. So the only thing that's giving me a little bit of pause is the fact that XLK is red at the moment, and that's what drives our growth. A lot of growth is tucked into tech at the moment, while our defensive is green. That's the only thing that's giving me pause there. But conversely, looking at the way the market's sitting right now, with IWM being so bullish, this could be that clean rotation I talk about, and I've talked about even this morning, where we see money roll out of the Qs, roll out of the NASDAQ, and roll into IWM, which is actually more risk-on behavior, not risk-off behavior. So that is very interesting to see here at the open. And believe it or not, we've only been open for 10 minutes here on the market, so that's very peculiar, in my opinion, that not much has really happened thus far, but it feels like a lot has happened. A lot of names are moving right now. I'm looking around on a second screen here. A lot of movement going on right now. So I guess we'll stay tight on the market here just for a little bit more, a little longer. And maybe we'll see if we get a play opportunity here. Maybe we'll get a day trade off for you guys for your entertainment and enjoyment. Nvidia getting hammered right now. Down about $3 right now, almost 2%, which is a pretty big move on Nvidia. Looking to fill this gap here. Watch the low. Watch this high of this 714 candle. That's 165.49. You're not far off. It looks like it wants to cool here on the daily chart in general. It could use a little bit of a cool down. It wouldn't shock me if the bears try to push for that gap fill. If that does tap today, here I'll even put an alert. What is this? 165.49. Create alert. Nope, didn't mean to do that. 165.40. I gotta zoom all the way in. But I'll create an alert here because if it does tap that level, I'd be interested to take a long. Here, I'll go a little bit beforehand just so I can be aware and catch up and watch it. Create an alert below. There we go. All right, so we'll watch that today. There could be an opportunity to take a long as like a mean reversion play. And at that point, Nvidia's going to be down like almost 3%. Now, your contracts could be very expensive. You could see some IV getting juiced there. But there really could be an interesting opportunity there on Nvidia filling that gap and at least near term popping out of here. Maybe not as soon as today, but this week even. So buying something with time or maybe using a spread. I'm thinking about using a either put credit spread or a call debit spread, depending on how IV is sitting, so I can take advantage of the IV. If the IV is elevated, then I want to take a credit spread. If the IV is low, which it probably isn't, then I want to do a debit spread. Because if the IV is elevated, those credit spreads work in your favor, because as IV gets crushed, you make more money because you want the spread to expire worthless. And if it's a debit spread, you want IV to increase. So depending on how IV's sitting, if we fill this gap today, I think there could be a spread opportunity here, like 2 weeks out, more than likely. And you don't even have to go that wide. You can even do like probably a $1 spread and probably get like, even if you went $1 out the money, you probably get like a 0.3. Well, they don't do $1, it's $2.50. So probably target, go like $1 out the money, or one strike out the money, and target around like under $1 on the spread. Probably could work out pretty nicely for you. That at least puts you in a almost like a 3-to-1 risk to reward. It's like 2.5, just going off head math. So that's what I want to watch as an opportunity for today, as I can take advantage of some tech bearishness perhaps and make a little money. Looking at the rest of the Mag 6 here. Ooh, Google not looking too great there. Apple showing strength. Good little pump here on Apple. 213.58 at the moment. High of day was 214.03. Basically have like kind of a double top here on the daily. Could also argue you've got some level of like a misshapen cup and handle thing forming here. I don't hate it. Like I said, it's just that earnings that makes me a little trepidatious. But if the bulls can get some momentum behind it, it does look pretty solid. Yeah, Qs are heavy at the moment. If you're exposed in the Qs, you're probably not having a great day today. This is, it's funny, this movement here, actually let's look and see if I'm right, is very indicative of how IWM opened yesterday. I'm just going off memory, let's see if I'm correct. But IWM looked like it had similar movement yesterday. Oh no, I'm misspeaking. I'm picturing this on the Qs today, but this is actually not looking great for the Qs. It's a very sharp decline, but I believe if we're going to get a mean reversion, it would probably be right around now on the Qs. Let's see. Could fall another $1. I'd be very careful here. If the Qs get sub 562, you're going to want to see support probably come in around, here, let's look at the daily, probably around like 561. You got this LOI here at 560.80, so use that as your support. If that level goes, you're probably going to get sucked down. I don't think you're going to get all the way down to 557.63, but that'd be like your worst case scenario. And if this taps today, I'm taking a long. So for whatever reason, Qs taps 557.63, or I'll even call it 558 for whole numbers, I'll be taking a long today on tech. That'd be a a pretty sharp drop. And I don't hate that, especially if I'm seeing this, again, this divergence between the IWM and the Qs. It's looking like that could be the case, especially if we see IWM rally break this 223.32. That's kind of the game plan here. Seeing IWM push hard, break that level. Consequently, the Qs drop all the way down to around 558. And then I rinse and return. I open a long on the Qs. I close my longs that I have on IWM, or put a stop at that 223.32. Kind of go from there. Volatility at high a day. VIX pretty choppy, like it's not really pushing either which way. We'll probably get into the heat check here momentarily because it's looking pretty tame right now, which is a good time to do the heat check or any sort of segment, which I would prefer to do with you guys while things aren't too crazy. And it's looking like that's kind of the case here today. Okay, so let's just take one more look around. All right, now we're seeing bears across the board here. All three indexes moving in conjunction, in unison here. Going to the downside. Let me check SPY over here. It's volatile. You're going to want to see SPY pretty cleanly break that basically high a day. SPY needs to get over high a day if you're a bull today, in general. Otherwise, like I said, you're more than likely sticking in this chop zone here all day. But bulls would find their footing basically over 629. Use your pre-market high, 629.25. Otherwise, you're getting pinned. Bing bong, bing bong, bing bong. And if the lows break, so if we see more bear pressure, if the lows break, so basically the 627.86, there's a good chance the 626.87 is not breaking. And that's where I'd look to take a long, in conjunction with a 558 long on the Qs. So that's kind of the game plan. So I'm giving you guys everything you need. So if I'm not live when this happens, you at least can go, oh, remember what Adam said when I watched the stream, and you may make your own trade, right? So hopefully it's a little helpful. That, and you also have the opportunity on NVIDIA, right around the gap fill here. High of this candle, 165.37. So I put an alert a little bit before that, just so I can watch it. That'd be a good time to get in on basically a mean reversion play here. I mean, you're down already 2.5% for it to get to that point. Like I said, you're going to be down about 3%. Pretty solid move on NVIDIA. So that'd be a point where I'd be willing to take a stab there. And it more than likely would work out. Even on like a quick mean reversion, you could put a stop on it and it'll look fine. Is there any news on NVIDIA? I guess TSMC had some sort of downgrade, unless you guys can tell me in the chat. Is there some sort of news or something? Because NVIDIA is just it's not finding any bullishness at the moment. Granted, the daily chart looks like it needed to cool, looking very toppy, right? So it's not, it could just be a technical move here, but typically when you get kind of a stark fall like this, you get some sort of news instead of just aggressive selling. Yeah, all three indexes moving together at this point in time. So maybe it would be best to do the segment. We'll flip back and then we'll see if there's opportunity for the market at that point in time. Soundhound pushing lower. Yeah, they gotta pull it out of their ass very soon on Soundhound. That candle yesterday is disgusting. That open yesterday was looking so good. Across the board, yesterday's open was looking phenomenal. And the bulls couldn't have fumbled the ball any harder. Such a hard fumble by the bulls. It was atrocious. And it's looked like today, in general, the bears are taking advantage of that. I don't want to miss my long opportunity if I'm live here. Or if I'm doing the segment. So I do want to be live. I just don't think we're going to pull that much lower that soon. I think more than likely would happen around 10 o'clock. And remember, if this level, the 629.47, is not broken by like 10-ish, there's a very low probability it would. Doesn't mean it can't, but it's a very low probability it would. And again, there could be news catalyst. Remember, Trump is speaking later, so he could say something that the market loves and we rally. Just keep that in the back of your head from a risk standpoint. Maybe I'll just babysit NVIDIA here for a minute. We're near it. We're getting close. Only $1 away from where I'm looking to enter. So I guess what we'll do, we'll babysit NVIDIA here. and see. Because it is getting pretty damn close. Pretty close. If I do take a long, I'll probably look at... I'm debating if, let's check out both the 167s and the 170s for this week. Delta 46, Gamma 5, Vega. 42% on the IV. IV percentile is 39. But IV percentile in general is pretty low at this moment. But we're over on the day. So IV is higher than it is on average today for NVIDIA, which makes sense. It's dropping very hard. So want to keep that in the back of your mind as you're looking for a long. I like to go 1 or 2 strikes out the money, especially for a day trade, because I can take advantage of a potential IV pump. In this case, though, because IV is a little bit more expensive, I mean, higher than it should be, I'm concerned about getting a bit of IV decay or crush. So in that case, I'd move a little bit closer to the money here. And I'll look at the 167.5s on NVIDIA. I actually might get in now. We're pretty close to where I want to enter. I have that alert right here. All right, that alert triggered. There it is. There's the trigger on the alert. And we're only about 30 cents off here, so now I'm going to start to load. All right, I'm long at 211 on the 167.5s. Sorry if you hear me click-clacking, just typing the alert out for our members in our Discord community over at Exclusive Trading. Pretty tight risk to reward here. Here, I'll add this to... Man, look at Grab. Fumble the bag. What are we doing? Up at 590 yesterday. Now it's red. Come on. Lame. We'll, here, I'll put this down here next to... Actually, I'll leave it at the top. So the gap doesn't fill in for another 10 cents or so. So a little bit of an early entry on my part, but I'd rather be a little early than late. I'll probably give this legs 165 if it really gets sharp, maybe 162.5, because a steep drop and a quick rebound isn't the worst thing either. That gap is now officially filled, so we'll babysit this here for a minute, because this is a lot of heavy. Look at the RSI on the 5-minute, 12. It's 12. And again, I don't use RSI as an overbought, oversold. I use it as a momentum indicator. So this is actually showing a lot of strong bear momentum. But this is where, if you're taking a stab at a long, this is where the risk to reward makes sense to take a stab on the long for a day trade here to get a mean reversion at least to the POC here at 168.40. What is that? 43? 43. 168.43. And again, this could sweep basically to here. Worst case scenario, it goes all the way to 162.5, which I really don't want to see. But that would be quite an aggressive drop on the daily. That puts us all the way down. Yeah, right around here. Basically tapping the 21 EMA on the daily. I just see that very unlikely. And even if that does happen, I'm still... That would be like where I'd actually... If that breaks, then I'm taking the L. That would be the loss. But like I said, if I'm going to take a stab on a long on NVIDIA, it's going to be here when it's down 4%. And where it really should get some level of reversion here. Look how high the volume is. This is people more than likely getting scared and dumping. At this point, looking at it down 5% and going, ah, sell everything. Which is when I typically like to buy. So we'll keep an eye on that. How SPY react. Oh my goodness, SPY. Holy crap. It melted through that zone. Now this is where I'd also like to long, actually. I won't talk about it. I'll do it. All right, I'm long the 0 DTE 627s at 108. Moved a little quick, so you can also take a 2-day or whatever. I'm going to trim some here. 16%. Just keeping an eye on this. I'm trying to watch NVIDIA SPY, or my NVIDIA contract SPY, and obviously NVIDIA at the same time here. Hold on, let me pop this back here. Let's put this here. Bing, bang, boom. Back there. Okay, let's watch SPY. Nope, SPY. So we're going to want to see this level hold. So we wicked down below. We wicked another LOI down here at 626.28. We should get a nice rally here, at least to 627.86. And at that point, my contracts would be in the money. I'm sorry, they're in the money right now. But they'd be more, basically almost at break even on intrinsic value with a 108 entry. At that point, they're worth 86 cents intrinsic. So that'd be a pretty solid point there where my risk reward's really balanced and I can kind of just let it be. Those NVIDIA contracts are still under my entry here. Nice push here on SPY. Here we go, $1.30. $1.34. I'm gonna trim a few more here and put a stop on, just because it's a 0 DTE. It's 22%. I promise we'll get to the segment. SPY, 22% gain. Add stop loss at break even. Cool, so now I'll get this stopped out if it falls, which it may backtest this once again to try to push. Right here at the AEMA is going to act as some level of resistance. You have this red star coming down as well, so if bulls can kind of hold it here and push, you're going to get a nice rally here, and you're more than likely coming back to the POC. But for whatever reason, if this breaks, which again, from what I looked at pre-market, this level really shouldn't break today, and it's looking like it's trying to, but it really shouldn't. This level shouldn't break today. And we're almost getting stopped out. I get stopped? No, I didn't get stopped. That was close, I guess. I just watched on the screen, said 108, but I guess my order never filled on the stop. Okay. Not stopped yet. Like I said, this level shouldn't break today. If it does, then I want to definitely be more risk off in general on the day. Those NVIDIA contracts still underwater here. I'm just watching the SPY one right now just because it's a 0 DT, so obviously it's a little bit more sensitive. All right, now that fill. Yep, stopped out on SPY. All out. Nice 22% gain. Not too shabby. Might, as the kids say, run that back if we tap this lower level one more time. But definitely want to be a little risk averse here. How's my NVIDIA doing? Sitting right around that gap fill area. I believe it was 16559. So we're just shy underneath it right now. Bulls are looking like they're trying to finally make a base here. A little shy off my entry here. 211 entry, right? I believe I have 211. Yep, 211 entry on those NVIDIA calls. So these are still on sale if you like that idea. SPY looking interesting. IWM looking like we're trying to reverse it in general. Watch NVIDIA for a rally over that gap. We're at the gap right now. You're going to want to see a rally. You're going to want to see volume flood in pretty quickly. Like we're going to want to see a good volume pop on this reversal here in the next like 5 minutes essentially. If we don't see a push here in the next 5 minutes with volume, then that's a sign for me to get out. Unfortunately, but it is what it is. It's not going to be a good sign for me. Guys, it is 10 o'clock, so I guess we're going to go a little bit later than usual. So hopefully you guys like that and you're enjoying the stream. You're enjoying the trades. The 2 trades we took so far. I guess I'll ask now. So if you haven't already joined later, if you like the stream, do me a favor, wherever you're watching in the entire galaxy, whether you're on YouTube, Instagram, or X, do me a favor, drop a like, drop a comment, say hello, subscribe, or follow me. Any little effort of support is greatly appreciated. I'm a very small fish in a very big pond of other content creators, and I greatly appreciate your eyes and your ears that you're willing to watch me and listen to me, and I hope I can provide great content for you. And all I ask in return is that little bit of sweet, sweet, sweet algorithm interaction. So if you could do me a favor, drop a line, say hi, comment, like, subscribe, whatever it may be, I appreciate it greatly. And don't forget, if you subscribe to my YouTube channel, once we hit 500 subscribers, this will become a daily stream for you guys. So if you like that, tell your friends or go subscribe yourself if you haven't already. Thank you very much in advance. All right, back to the market. Got a little bit of a push here on NVIDIA with a tiny bit of volume there. Broke the red SAR in the 1 minute here. Basically, this should have a pretty strong push if volume steps in. That's the keyword. If volume steps in, basically to the low of this candle, 167.80. So we got about $2 here. And if we're just doing complete conservative math that I like to do with you guys when we're looking at options, and assume zero delta appreciation, getting to that point would be roughly 80 cents in delta. It's currently sitting at $2, so it'll be $2.80 a contract. Let's do some math. $2.80 a contract, assuming a 211 entry, would get you 33% gain on that trade. So if it works out, and if the bulls step in right here, and if we can get to this level, this 167 8-ish, not only will those contracts be in the money, but you're more than likely going to have a nice 30% gain there. But we got to get going now. Like now, in like the next 2 to 3 minutes, very, very soon. If it doesn't go very soon, this could turn sour and go even lower, which I don't want. We don't want to see that. SPY basically double bottomed on this LOI here. So keep an eye on this too for potential re-entry. At this point, though, I might want to tack on a 1 DTE because that's also going to roll us into... Remember, we have Trump at 11, so you want to keep that in the back of your head. Unless we're looking for a quick scalp like I did with that 0 DTE. It was looking like we're getting a lot of volume. We're getting a pop. So that's where I want to get on a 0 DTE. That's where the most money can be made, really, on that quick volatility. Kind of starting to... The word I want to use is meander. So at that point, I want to consider buying a little bit more time, potentially looking at like a 1 DTE at least, which gives me the flexibility of the day, not really having theta to worry about. So we'll wait and see here. And the Qs are almost near that, basically this level where I said I'd open along. 557.63, I basically said 558 for simplicity. So we're getting near that level. If NVIDIA rallies, we may not ever get to that level, which I'd prefer because I'm already long NVIDIA. But if we get to this level, I like the risk to reward on the Qs as well at that point. Qs are already down a full % on the day. Almost $5 from the almost $6. Sorry, 550 from the open. Big move down on the Qs. Russell holding it up like a champ right now. Only down 0.14%, about 30 cents down on the Russell or on IWM. Meanwhile, the SPY is at that lower LOI. This is your fourth tap. 1, 2, 3, fourth tap. I'm debating if I want to take another long. I think I will. Yeah. I'm going to do a 1 DTE this time. Let's go a little out the money, though. How's my IV? The IV's 12. Okay, so IV's actually cheaper. It's not bad. All right, I'm loading the 629s at 97 for tomorrow. And I'll add that to the watch list so you guys can see. Ooh, NVIDIA calls. Oh, well, all right, everything started going up. Good. Good entry on the 629 calls. Good job, Adam. We did it. Back. There we go. This is for tomorrow, right? Cool. All right, so I have at the top of the set list right there a 9.7 entry on those, currently trading at $1. NVIDIA, like I said, I have a 2.11 entry. Those are at break even right now. 1, 2, 3, 4 taps and a reversal. So it looks pretty solid here out the gate on the market. Could have made the same trade on the Qs. Like I said, that 558 area is what I was watching. We never really got as bearish. But I prefer the SPY exposure because IWM is bullish. So if I'm betting that the Qs are also going to recover and IWM's already bullish, so that's two things more in favor of the SPY going up, because obviously small caps are some level of sentiment driven for the market. And if the Qs recover, that's obviously going to help the SPY as a whole. So I'd rather have the SPY exposure versus the Q exposure unless we tap that bottom level on the Qs. So I know I said at the beginning of the day, I was like, probably don't want to trade the indexes. Here I am trading the indexes. All right, those 629s are back at entry right now, currently at 0.96, so penny under, and those NVIDIAs are pretty flat at the moment. It's a little worrisome here. I'm not going to lie on NVIDIA. I'm trying to give it a little bit more rope, but it's got to go. Like, now. This isn't a good look. It's got to go. It's got to go now. Now. I command thee. Go now. It's got to push. It's got to push now. Use your, right around here. 166.41 as your trigger. Breaking that more than likely should push some volume here. If we break that and it's looking questionable, I'm going to get out of NVIDIA, just so you guys are aware. Which I'm roughly around my entry, so it's like no love lost. So if right now, like on this candle or the next, so this candle and the next candle, we don't push, I want to get out of NVIDIA. Oh, look at SPY. Might take a little trim here on SPY. I'm just watching NVIDIA right now, and I got SPY on my second screen here. I'll take a little trim on SPY here for 11%. And that's on a 1 DTE. Not too shabby. All right, NVIDIA is now green on my trade. We're $1 out the money. This candle's okay. Tiptoeing. It's okay. It's not great. It's okay. Basically, this candle is what matters. We're at my trigger, so 166.41 is what I gave you guys as a trigger. So we need to see volume step in right here or I'm out. Because then the risk to reward is just meh. I don't want that. I'm quiet just because I'm staring at everything, so excuse the dead air. I'm trying not to give you guys dead air. Try to keep the energy up, especially early in the morning when we're trading. But also I need to make sure that I'm not losing money. All right. I'm very hesitant because you are too, NVIDIA. I'm going to close it. I'm going to walk on NVIDIA here. It's a 3% gain. If I have to question it over and over and over and it looks hesitant, I don't want it. That's the mature thing to do, and that's what I will do. So, peanuts on that one, but better than nothing. Oh, that's really funny. So, my dad watches the program. Hi, Dad. And my dad said, I thought it was supposed to be a green day in the market. Instead, it's on your shirt. That's actually really funny. Thanks, Dad, for the laugh. NVIDIA could still push here, but again, for that contract and where my risk to reward was, it was too questionable and I didn't want that exposure. You could just put a stop loss on it and see what happens. This is looking like it's like it could do one of these things where it slowly goes up and then just, hopefully it doesn't because I still have that SPY long, but with my entry, if my entry was down here at 164 or 180 or something, I'd have a little bit more flexibility, but with a 211 entry, it's too close for me and it's not worth the squeeze isn't worth the juice, as they would say. So hopefully if you decide to hold on to the trade, it works out for you. It's not invalidated by any means, but with how these candles were looking, it was very questionable and it wasn't worth it to me. So I don't want to push it here, push my luck rather. And I still have SPY exposure. So even if NVIDIA does end up working out, it works well. the SPY trade should work out for me. So either way, I should benefit off of general bullishness on the market. So it is a win-win either way. It's just about reducing that exposure on things in general. I say we roll into our segment. What do you guys think? You guys excited for the heat check? Let me know in the chat. What do you think? You guys like the heat check? People have DM'd me saying they like the heat check, mainly because it covers like meme stocks and whatnot. And obviously a lot of you have interest in that, and I don't blame you. It's gotten good reception so far. So, well, you know what we'll do? I will put a stop loss on SPY. I'll do my segment. We'll come back and we see if we have a nice present to open. How's that sound? Adding stop loss at break even on SPY because I am live. I'm not gonna be able to babysit it, but that way everything's done. So either way, no matter what you did today, 3 out of 3, not fantastically amazing trades, but made some money today. And that is not too shabby in my book. Remember how hard sometimes you have to work and hustle to make 10% on equity, right? So anytime we're getting 10% in a matter of minutes, that is a beautiful thing. And you can compound those gains and make even more money, which is great. Who doesn't want to make more money, right? All right, let's roll into the heat check. Let me just get prepared here. So I've got, what do I got? 1, 2, 3, 4 names for you guys today on the heat check. I might get stopped out before it even goes. Before we even start it. Whatever. We'll just come back and see. All right, the NVIDIA call worked out, I guess. If I was still in this position, I would definitely trim here, and I would definitely put a stop loss. You can do whatever you want. If I was still in that NVIDIA day trade, I'd trim here at least 50% of my size, and I'd be putting a stop loss on. Do with that information what you will. If it can power through, that's great, but I would be careful. I don't want anyone regretting anything that they hear on this program. I want everything to be great, kosher, good information, right? All right, let me get set up, and we'll roll into the heat check. All right, and I will record this as per usual so you guys can watch this back if you'd like to. Today on the heat check, we got GameStop, AEHR, Open, and Oscar. I didn't really want to do Oscar, but a lot of people were asking about it, so I was like, all right, I guess we'll do Oscar. Guess we'll make it happen. Alrighty, here we go. Welcome to the Heat Check, the part of the show where we look at the hottest meme names in the market right now and see if there's any substance to all the heat. Obviously, the heat check, right? So we're going to look at 4 meme-worthy names that are available in the market right now to you, for you to consider in your portfolio and see if there's any substance to what's going on with these companies. Maybe there's a technical trade based on certain levels we can look at. If we look at any speculation, see if there's anything there as well where there could be something a little bit deeper. So I got 4 names for you today. We got GameStop, AEHR, Open, and Oscar Health. So we're going to take a look at GameStop first. Now, GameStop, obviously, if you haven't heard of this one, you've been living under a rock. It was the proponent of the entire COVID trend, where I'm sure a lot of you probably came into trading in general. When everyone was stuck at home, we need something to do, and everyone bought GameStop stock and it went to the moon, right? Well, GameStop is sitting at a very interesting level. Now, they have a treasure trove of cash at this point. They have raised, I think they have like $9 billion in cash, something like that. They have a ridiculous amount of cash that they're sitting on right now. And they're actually sitting at a very interesting place on the chart. Now, they've diluted their shareholders quite a bit, to be fair, and they're currently sitting at about a $10 billion market cap, which is an interesting point for me in what I'm looking at GameStop. Now, trading GameStop, you got to take a few things into account. You're either trading on a turnaround strategy, or you're trading on, well, I guess both things, turnaround strategy, technical levels, or if they can literally change their entire business, which is a turnaround strategy, but one of them is more based on if you believe in their current business model, or if you think a newer business model may be something to consider. Now, with as much cash as they have, is almost the same size as their market cap, it's interesting, right? To have a company have almost as much cash as the size of the company is something to at least make you interested in potentially considering it. I like it because of where it's sitting on the chart. Now this 6399 level, which it's literally at right now as I'm talking about, it's at 24, has been 2399 level has been a very key level in this stock for forever now, ever and ever and ever. This seems like such a key level for this stock, and it's just above it right now. And ever since we had this quick little sell-off here on the back of earnings, it's been quietly making higher lows. Now, not by much, but a very little bit, as it supported or found support basically down here in the low 22s. Now, currently, again, up near 24 bucks. Left this massive gap behind, and it is also underneath all of its EMAs and MAs except for the short-term ones. So, a little bit of a, I would say, indecisive on the shorter term scale. However, if it breaks above the GP here, so that's at 24.72, this could look pretty solid, but not without its risk, obviously. Again, outside of what you think about the company in general, depending on your outlook in terms of time, this could be something that you sit, especially at this value. And even if you're playing it only to 30 bucks or something, you still get about 20% upside for pretty limited downside. Even if you're looking at 20 bucks as a stop, which would be very aggressive to the downside, you're risking 10 to 15% for 20 to 25% upside from where it's currently sitting. Now, the weekly is looking a little iffy, but the monthly, the way that the chart's shaped out, which I got all these doodles here, is super tight, which is why I'm interested in this name at this level and where it specifically is on the chart. And as you can see, even on today's candle, where we wicked and your GPs here, these two golden dotted lines here, that's your golden pocket, and actually rejected back underneath it. So this is a trade that I'm personally interested in. And to full transparency, I do not have longs in any of the stocks that are on today's heat check, but I may consider them after the filming of this segment. What is interesting to me is considering a long position around this 24 area with a stop, tighter stop, right around like 23. So that way I'm risking only about like 5% or so, but I've got this huge gap here. Now, that's not saying it's going to fill right away, but there's a big opportunity here eventually to the upside around 29 bucks. So I don't hate GameStop here, but it isn't without its risk. And I would say if you do consider the risk on GameStop, you'd have to manage a stop, and that stop would be managed essentially no lower than yesterday's candle at 23.05. So maybe 23 stop, 22.9, whatever you may want to do. That's where I would consider a stop there. You risk your downside, and if you're patient, could have a nice little upside move eventually. Next stock on the list, AEHR. Nice little gap up today, kind of shot up here real quick. Now, this was a stock I was long for quite some time, and I sold out on. Boo-hoo. I was down here in the $8 to $6 range, and I missed the train, and that's okay. It happens sometimes. But now I have no exposure, and I believe they had some news, right? This is an AI company. I believe they do drones, right? If I remember correctly. Yep. And now pushed up high on some news and gapping above old gaps as well. Main reason why I wanted to bring it up is it's tapping the 200 MA on the weekly. However, the monthly is actually turning looking at your MACD, turning bullish, turning to the upside, showing some momentum, bouncing off that 200 MA on the monthly, which is an area, and I love my 200 MA across all time frames, an area you should keep an eye on. So now that it's moving a little bit higher here, and it's not without risk, just like GameStop, and I do think it's chasey here. So what I would personally look for if I wanted to have a long in AEHR, I would look for it to come down and base no lower than this 1581, and ideally sub 1723. So we shoot up here, kick around here for a day or two, come back down on lower volume, and find some space in here between this 1581 and that 1723 area before considering a long. And assuming all technicals look good at that point, then consider a long. It is very chasey here. It's been on a rally. If you're already in, God bless, you made money. But chasing up here could be a little chasey. Like I said, they had some news today which caused this nice 20% pop. But I would be very careful. It's got pretty good volume here. This could be a move where it could move more parabolic. So it could have another push the next day or two, to be fair, especially with retail-driven sentiment, people FOMOing in. But this is, if you're more of a patient investor like myself, you do not want to consider at this level because the risk reward isn't that great, especially when you're looking at key basic resistance levels, the 200 MA on the weekly, and on the monthly, you've got the 50 MA here as well. So on the monthly and on the weekly, it's at a point where it probably is going to reject. It probably needs to come down. But at that point, you'd have better risk to reward if you do like this name, letting the 8 EMA catch up. Again, farting between this like 1723 to 1581 area is an area in which I could see a long possibility with a managed stop. Next one's open. Now this one was hot, right? Yesterday this thing piled up. I mean, look at the daily, or I'm looking at the 5 minute here. Got all the way up to 497, and then it lost, what was it, like 40% of its value into the close. It was crazy. It was crazy move. And now today, grinding back up, dropping at the open. This is obviously extremely volatile. Another name that's in that e-commerce area, AI area. They operate a marketplace, essentially. It has been making a parabolic move here, and you've got a bunch of key LOIs in this area. So this is not an area where it's very clean. You have earnings coming up on the 5th of August. If you are a bull here, I'm not saying can't go higher. You may have done more research than me. God bless. Believe in what you believe in, especially if you got it at 50 cents. You don't got much to lose, really. But if you're someone who's new or considering this, it is very chasey here. Now, to be fair, it's not as small of a company as it was when it was 50 cents. It's now a $2.5 billion company in terms of market cap. I think if I wanted to consider open, I'd want to look for a retest down here. Chasing these names, and as you may have noticed, the theme of this little segment is a lot of it's chasing, right? A lot of these meme names are hot and they're exciting. You're chasing. So unless you're scalping, you're moving very quickly, these names are going to burn you more than likely because the opportunity is already gone. The opportunity was down here or here or here. It's not up here. You are the people buying GameStop when it's at 500 thinking it's going to go to 1 million because MOAS, right? So that's the point where you don't want to consider purchasing. It's already taken off. You've missed the boat. Doesn't mean the boat can't take another ride again, but you need to let things cool off. And where the level that makes the most sense to me, and you can even see if I zoom out here on the daily, decent level of consolidation between 261 and $180. So in that range, if I really liked open and based on how the technicals would look at that time, that would be the spot in which I would consider a long if I was to consider a long on open. Anything north of that, especially at this point with how parabolic this is, it's very, very risky. Now, their volume's been insane. Yesterday's volume was 1.9 billion shares, right? So huge movement on the market in general. I think that earnings is going to be a big catalyst as well. And I think if I was long, if anyone was long 50 cents down here, you're more than likely take your profits. And that's why the volume was so high yesterday, because if I owned a bunch of shares at 50 cents, I could sell a bunch of shares at $4. The volume's going to spike through the roof, right? Because you can accumulate at such a cheap value and sell those shares for so much more at a higher valuation. The volume's going to go through the roof. And that's where we're probably starting to see some profit taking. In fact, if I zoom in here, let's go to the 4 hours. Good. This is 4 hour with extended hours on. I actually would consider a short as a day trade. Now, I haven't talked about this on the program because I'm filming this live, but I'm actually looking at a potential short right around $4. And I might have missed the boat on this because it's already tapped that $4, fired down to like 280. But if it recovers and it can't break $4, like even just $4 flat, that is a decent short opportunity here on the 4 hour. So that's something I'm keeping an eye on. Me personally, if it pops back up and stays sub 4, I may open a short opportunity. And I'll be very conscientious. The IV percentile on this thing is as high as it possibly could be. It is at 100%. So you are paying high IV. So if you are buying puts specifically, you're going to be paying an elevated price for those puts. So just be aware of that. Maybe consider something like a call credit spread that could offer you that exposure, that short exposure, while also benefiting from that IV decay. Something to consider. Last name on the list is Oscar. Now, Oscar's been a very interesting one. They actually had they basically mentioned today, and they had earnings, that they guided up, but they missed. Or not they missed, but they're worried about the ADA stuff and whatnot, but they still guided up, which is peculiar to me that they guided up, but they're giving many warnings that they could make not as much money as they originally intended to, but they still raised their guidance. And stock is reacting today, as you can see. It's up about 4%, and moving pretty okay since the open, all things considered. In quarter two, and can you see that on the screen? You can't. Oh no, you can. They had a hefty loss, so that's what you're seeing right there. When they reported that, but they're basically saying that they're going to guide up even though they missed. In the future, they're going to make more money. And you got to remember, the market's always forward-looking. So even though they lost money yesterday, if they say, hey, we're going to make a bunch of money tomorrow, the market would tend to like that more, and that's probably what you're seeing here as a little bit of confusion. As some people are selling, some people are buying. Obviously, more people buying than selling because the stock's up. As more people are betting on the future of Oscar. Now, this is one of those, again, hot meme names at the moment. Recently had quite the downfall, all the way from 22 all the way to 14. You're below all your EMAs and MAs. I mentioned on this program maybe 2 or 3 weeks ago, this is actually the spot where I was looking to add, and I did not add today or the other day, so I did not do that. So again, I have no long exposure at the moment, but between 1267 and 1320 is and was the sweet spot to add. Now, if we move up and we reject the EMA on the daily, there's still a chance we grind back down to that 1320, and at that point, I definitely look to add, as that'd be roughly the third touch of this general area where I'd look to long. I would not short this name at all unless it breaks under 1267 with volume. That's a keyword, with volume, because the way the weekly and the monthly look are actually not that great. This monthly candle sucks, to be frank. This is not good. Last monthly candle, ooh, looks exciting. This one, awful. And what I really don't like about it, currently, the month's not over, but currently it's a bearish engulfing candle on higher volume. That's like double bear negative. We don't want that if we want to be a long. So the way that this month ends is going to be very important. Looking at the weekly as well, this is an awful weekly. Pushed up, coming shut down pretty sharp, sitting at this POC here on the weekly. MACD is flipping down as well. RSI pretty neutral, so momentum's pretty flat. But you're sitting right here. I think how this month ends is going to be big, so I don't necessarily want to rush it. If we do tap, again, that 1320 area where I want to consider getting long, mainly because of how the monthly and the weekly looks. And going further back, at least looking at the monthly, if that closes and pushes lower, especially if it breaks at 1120, which is the bottom of this, basically the 52-week range, this could get all the way back to $5. So this could get bad quickly. And the other reason why I'm worried about it getting bad quickly, if it does break that level, is because retail owns it. And what does retail do? They go, and sell everything, right? I'm losing all my money. So that's why I'm more concerned about this stock specifically. And I'd actually rather short it if it got down to that level and broke, especially breaking this 1267, which he broke it in pre-market today and rallied up pretty quickly. Getting down there, I mean, this 1120 is going to be a clean short. If this breaks 1120, I would short heavily, Oscar. Heavily. But 1267, you could still take a short on it. I would prefer to be a long, but just because of how the weekly and the monthly is shaping up, it definitely is at least screaming exercise caution, unless today, tomorrow, and the next day, we push all the way up and get north of $15. It is not looking good, though, to be fair, on Oscar. Now, guys, that was the heat check. I hope you enjoyed the segment. We covered 4 really hot names in the market right now, so hopefully you took something away from it. Again, those names were GME, AEHR, Open, OPEN, and please do me a favor, like and subscribe, and drop a comment below. Cool. What do we think, guys? Oscar's been a roller coaster. I'm sure a lot of you looked at Open. I guess I should keep this up here for you guys now, because if we tap that $4, I will take a short on stream. But I am hungry, so I will probably hop out of here soon. I like GME. GME is a good balanced risk here, in my opinion. I don't hate it, and if you're patient. Because I like when I can find these risk to reward setups where I'm only risking $1, like a drawdown in this case of like 2%, and I have the potential to make 20%, right? That's attractive to me. That's kind of what I like here on GME, quite a bit. Pretty sure I got stopped out. Let me see. Yep, stopped out. Stop loss hit on SPY all out. Oh well, might still be an opportunity there, but for now, looks like I got stopped. Guess that, oh wow. I don't know how many more times I gave that warning. It was literally right here at 10:14 that I would get out of NVIDIA, or I would trim at least half my position, put a stop loss on. Boom. That's why we don't lie to ourselves. I always say that in our community all the time. Don't lie to yourself. Be honest with what you see. And having that humility with trading is really hard. It's really hard to break that mentality, but being able to say, hey, I'm wrong, and then be wrong and take the L, that it will pay you dividends in the future than just smashing your head against the wall and be like, I'm right, I know I'm right. That will more than likely break you and harm you more than do you any good. Anyway, guys, that's probably going to wrap it up. I'm really, really hungry. I gotta go eat. Keep an eye on the market. Like I said, this is pretty key level. It's unfortunately I got stopped out because it's looking pretty okay right now, so I might get back in. But you guys know what I'm looking at on the SPY. You know what I looked at the Qs, looking at the 558 level, and you know what I'm looking at IWM specifically. Really, really, really eyeing to hopefully get over this 223.32 today and get a nice push. You got Trump speaking in 30 minutes, so you don't want to sleep on that. And don't forget, we got some AI chatter tomorrow as well. Trump, I believe, is doing speaks on AI tomorrow, tentatively for 10 o'clock, so it could be at any time, but we'll talk about that while we're live tomorrow. But just be conscientious of that if you are, what am I trying to say? If you're swinging any AI positions, especially short-term options, that could affect your holdings, so you want to be very conscientious of that as we head into tomorrow. T-Burn says, great stream. Thank you, T-Burn, for the support. I greatly appreciate it. But that's going to do it for me, guys. Let me pull that up. Let me just make sure I'm not forgetting anything. I'm thinking. Talked about everything. You guys are set with volatility as well. And volatility popped off a little bit. Watch the low day break on UVXY. Soundhound trying to recover. Soundhound looks like IWM. Okay, good. Watch this Q break here as well. I think you guys are set up pretty good. I feel pretty good. I feel like I gave you a good game plan. You're set. You know what you're looking at. Feel prepared. Good. All right. That's going to wrap it up for today's program, guys. And don't forget, I'm going to do another stream tomorrow and Thursday, both at 9:15. So if you're liking the show, please feel free to swing by then and come hang out with me tomorrow. And some say you'll need an edge to trade. Well, I like to look at things from a different angle, and that is always what you'll get right here on the Atomcash angle. Have a great rest of your day. And remember, precision beats prediction every damn time. I will see you tomorrow at 9:15.
The time has passed, and that's a wrap. You're armed with